Okay, so MCQ number 48. MCQ number 48. A firm that intended to buy only small percentage of outstanding stock can buy them in the market is process called. Read once again. Change the options. Replaced with E, G, F, H. So A, B, C, D. The firm that intended to buy only small percentage of outstanding stock can buy them in the market is process called. Generally, the concept is called buyback. The concept is called buyback. It happening at open market purchase. It opening at where, sir? Open market purchase. What, sir? Tender offer is different. Tender offer is different. They're purchasing their stock, own stocks, where they can buy. Even company also they need to buy an open market only. Why? Because they are listed companies, no? Guys, clear? Now done. Option B is the right one. When it comes to MCQ number 49, if the expected rate of return on stock exceeds the required rate, we already completed. The stock is good to buy. You can see December 18 2 mark MCQ. MCQ number 50. Which of the following items would be not be included in WACC calculation? What, sir? Sir, taxes are three types, sir. Corporate tax, personal tax. Not three types, two types. Corporate tax, personal tax. What the rate we are using at KD calculation is there, na? It's called corporate tax or company tax or business tax. Personal tax calculation we are using at personal income point of view. So it's a calculation under KR. KR is there, na? There's a personal earning of the owner. At the time of calculating KR, we are using a concept name called personal tax. Clear? Sir, it means KR also be part of the KO calculation. At the time of KO, we are using personal tax, na? But KR is a different case. In rare cases only, we are using personal tax calculation. Very clear? Remaining all cases, we are focusing only on business tax. That's why, even though it's the right answer for this MCQ purpose, the best answer. Guys, clear up? Sir, not MCQ purpose, sir. They're using interest payment, sir. If it is relating to owner's fund, it's the right option. That personal tax is relating to what payments? Interest payment is the wrong answer. Why? Because corporate tax is the relating to interest payments. So this is a wrong option as per our right option. Exam point of view. MCQ number 51. An investment is risk free when the actual return will always dash the expected return. Risk free, I already explained. Risk and return are directly related. If high risk, high return, low risk, low return, there is a no risk, equal, na? Expected equals to actual. What is the answer? Equal to. What about the MCQ number 52? Which of the following is a false about the business valuation? Valuation is an estimation of business worth. Yes, it's a true. Valuation is not the same as price. Yes, true. Valuation does not change over time. No, it changes over time. It's a false. What about the D? Valuation require understanding of the business environment. Yes, true. So which one is a false one? C. MCQ number 53. What does Warren Buffett for his price is what you pay and value is what you get suggest. Can be different. Which one option is the correct one? What, sir? Price and value can be different. The same MCQ above. Here express value is not same as price. We said it's a true statement. But at that question we want false statement. Guys, clear? Now when it come to illustration, MCQ number 54. In which situation would a company like to have the needed for a business valuation? If you know the purposes, that is the answer. For the purposes only we are doing a valuation, right? What, sir? Yes. So when deciding the appropriate price to pay in a takeover, buying stationery of office use, there is no chance of valuation. The stationery value, if you maximum, you can take an assumption 10 lakhs, but the valuation shows at crore rupees. Now when hiring a new staff member, for hiring purpose we are not doing any valuation. When scheduling a board meeting, for board meeting purpose also we are not doing any valuation. So we are doing a valuation, we have a purposes: buyback, IPO, merger and acquisition, business reconstruction, or partner disputes. At that situations only we are doing a valuation. Next, 55. Which of the following elements are not critical in doing the business valuation? Not critical. Morning itself I said, if I wanna value the MRF company share, I'm not doing any paperwork. I just open my phone, I googled. Yes, sir. That is not a critical. Remaining all things are critical. For example, net assets point of view, you have to do valuation. You have to consider total assets less external liability. You have to do all those things. Then understanding of various laws is a difficult thing. Strong number crunching and spreadsheets ability, there is nothing but mathematical calculation involved. It is a critical. Understanding of business environment also be critical. Are you clear, sir? Why? Because different sector have a different natures. Service sector have a one nature, banking have another nature, and manufacturing have another nature. Understanding of business environment is that not that much of easy. It's a critical. Now knowing the company stock price, it also be critical, but comparing to above all options, it's a less critical. That's why not critical. Now what is the right answer? Knowing the company stock price is a not critical thing in valuation. MCQ number 56. Which premise of value is often used in circumstances where seller is under compulsion? I learned the word compulsion to sell, and that consequences a proper marketing period is not possible. Proper marketing period is not possible. Where? Forced sale, direct MCQ. The dash premise of valuation is used that would produce the highest value for an asset. Highest value of an asset. Highest value. Highest and best use saying that focus on highest value you are getting. Now when it comes to 58. Which premise of value consider the value of a business that is expected to continue to operate the future? What, sir? Going concern. Highest and best use focusing on highest value. Forced sale focusing on immediate sale. Orderly liquidation focusing on not immediate sale, but you have to sell. Next, when it comes to illustration number 59, the value of a group of assets that could be realized on liquidation sale give a reasonable period of time. Where? Orderly liquidation. When it comes to an asset, premise of value is highly dependent on its selected dash. Purpose. Risk factor. Cash flow. Expected rate of return. All are correct answers. All are correct answers. You have any all of the above answer? Now out of 4 you have to pick best one. This purposes includes risk, return, cash flow, COC. Guys, clear? That's why what is our right answer? Purpose. So based on purpose only we will decide the premise. Based on premise only we will choose approach. Based on approach only we will decide a method. Guys, clear? All covered under purpose. Now when it comes to illustration number 61, which of the following valuation methods involve the conversion of future cash inflow to single current value? Future cash inflow to single current value. So instead of present value, they use the word called what, sir? Present value. Both are same. If you know the present value meaning, you can easily say answer. But instead of present value, they used what? Current value. That's why students will be struck. Current value is nothing but present value. Now what about the illustration number 62? Which valuation approach should be applied when the asset has not yet begun generating income but is projected to do so? What, sir? Sir, in market approach, we want market values or company comparables or company transactions. In income approach, I want future cash inflows, WAC, terminal cash inflow. When it comes to none of the above is not a proper here, there is a cost approach. Now, check with this, put that cost approach in your mind and again check the question. Which valuation approach should be applied when the asset has not yet begun generating income but is a projected to do so? So they are not generating any income, but you have to do valuation. Are you clear? They are not use any comparable related information. That's why I will choose what approach? Cost approach. Now when it comes to what is the net present value based on the discounted cash flow method? Current market value we are not calculated based on NPV. We are not finding any V0 or P0. Return on investment, we are using a part of NPV. KO. Check the question. Check the question. What is the net present value based on the discounted cash flow method? What, sir? Future cash inflow. Converting future cash inflow into present value is known as NPV. Guys, clear? Now done. When it comes to 64, return on investment also wrong answer, sir. It talks about actual return, how much I receive because of investment. Are you clear? It not talks about the NPV. Now when it comes to past cash inflows, we are not considering, we are considering future or estimated cash inflows. Now what about the MCQ number 64? Which of the following valuation methods involve valuing an asset based on valuation multiples of comparable assets other traded in active market? Company comparable multiple methods. Which approach? Which approach? Market approach. Which method it is? Company comparable multiple method. Now when it comes to 65, identify the incorrect statements, sir, in the context of valuation approaches. Option: the cost approach reflects the amount that would required currently to replace the service capacity of asset. Yes, it's a correct one. Income approach should be applied when the assets has not started generating income yet and cannot be reasonably projected. Income approach should be applied when the assets is started in generating income. Yes or no? No. Yes, it's a incorrect. When it comes to C, the market approach provides an indication of value by comparing the assets with identical or comparable assets. Yes, correct statement. Net assets value or book value methods serves as a method of valuation of private companies where the detailed information is not available. Yes, correct. I expressed at the time of a methods explanation. There is a one other than approach method is there, net assets method. Are you clear, sir? Done. Now 65, which is the right answer? B is the incorrect statement. 66. Which statement accurately describes the concept of beta in risk evaluation? So if you know the alternative name of beta, then only you can answer. Risk sensitivity. If you know the meaning of this risk sensitivity, then you can easily answer that MCQ. Which one is the right answer? Option B. Beta only measures diversifiable risk. Yes, beta measures undiversifiable risk. As well, the only also correct answer if it is a systematic. So the diversifiable means it is a unsystematic. Guys, clear? Now when it comes to beta is relevant only in a loss situation. No, sir. It sensitivity talks about profit as well as loss. Beta is the same for all type of investment. No, sir. It depends upon the market situations. Now, which one is the right one, sir? Beta depicts how the price of security depends on the what forces? Market forces. That's the meaning of sensitivity. Are you clear? Market forces changes how much impacted by my company expressed by beta. Now MCQ number 67. In general equation for calculating rate of return, what does D represent? At the time of where? Rate of return. What does D represent? The rate of return is nothing but KE. The rate of return is nothing but KE. At the time of calculating KE, we are using D1 divided by P0 or D1 divided by KE P0 plus growth. Here D represent discount for a future income. No. Depreciation of asset. No. Dividend received in the holding period. That is nothing but next year. Derivatives of the security. No. Guys, clear? Option C. Now illustration number 68. In the concept of financial risk, what type of risk is not affected by the diversification? Not affected. What, sir? Systematic. Systematic we can't control. Now illustration number 69. If the S&P index has a standard deviation for return of 15% and stock A has a standard deviation return of 10% with the correlation of 0.8, what would be the beta of stock? I think I already expressed the formula. First formula, covariance of market security divided by standard deviation of market security. What's the second alternative? Correlation into standard deviation of what? Security divided by Now please tell me the answer. MCQ number 69. So beta equals to correlation market security into standard deviation of security divided by standard deviation of market. Now what's the correlation coefficient? 0.8 into standard deviation of security 10%, 0.1 divided by standard deviation of market 0.15, 0.53 exactly or approximately. Now what is the answer? A. Are you clear? What about the 70? Which of the following is not a type of risk associated in a valuation? There is a no type of risk called what, sir? Opportunity. Opportunity, it's not a risk, it's opportunity loss or cost we are using for decision making. We are just using for what, sir? Decision making. Clear? Now when it comes to illustration number 71, what is the formula for debt equity ratio in financial analysis? I think I already expressed the ratio. Total debt divided by total equity. Now illustration number 72. Adams Apex Corporation has a net profit of rupees 7 lakh dollars, equity of 1 lakh, 115 lakh dollar, long term debt 100 lakh, 10 lakh dollar. What is the company return on capital employed? I expressed this formula also, this ratio, return divided by capital employed. So generally here you have to consider EBIT. You have to consider EBIT, but there is no information of EBIT. They provided net profit, so that's why instead of EBIT I am considering availability information. So how much is a return? 7 lakhs divided by 100 plus 15, 20 lakhs 25 lakhs into 100, you will get a percentage. So not into 100, they expressed in rate. Answer 0.28, option D. Next, MCQ number 73. Business X has a total assets of $4 lakh, total liability $2,50,000, the equity $1,50,000. What is debt equity ratio? $1.67. Are you assuming total liability equals to debt? Total liability equals to debt. Yes. If there is no current liability information, total liability is nothing but yes. If you have any information, if I have a total assets, how can I decide a value of current liability on that? Guys, clear? Yes or no? No? Okay, done. As well, now debt equity ratio of the business 1.67. Answer please. C. So you have to check total assets equals to total liability. Total assets how much? 4 lakhs. The common sense total liability also 4 lakhs. But how much I have here? 250. It means it is just a long term liability. If you had long term liability plus equity, you will get what? Liability total. Now you can add the equity. 1.5, 2.5. How much? 4 lakhs. There is a clue we have. Not assumption. Okay. Conceptually, it's clear. Now when it comes to illustration number 74, statement is true about the interpretation of PE ratio. We want true statement. Answer A, B, C, D. Which one is the right one? A lower PE ratio indicates that share is underpriced. A lower PE ratio indicates that share is underpriced. We can't decide. We have a two perspective, investor as well as company point of view. Okay, done. A higher PE ratio shows that here they specify about the investor. Investor point of view, you can say answer. Are willing to pay is higher price for the share due to confidence in its future prospectus. Yes, for 1 rupee of earnings, they are charging high price. It shows a high PE ratio. So it's a false. It's a true. PE ratio is not reliable measure of company's performance. No, it's a reliable measure. A very high PE ratio indicates a company is undervalued. So they mentioned company. Company point of view, high stands for high valuation, low stands for low valuation. They oppositely saying. That's why it's a false. Now which one is the right one? Bombay. So we understand why I expressed in investor point of view as well as company point of view. Now when it comes to illustration number MCQ number 75. A company has a high fixed asset turnover rate. This may implies that now I will give a example for clarity. See, asset turnover ratio apart from the cost to turnovers, remaining all turnovers, numerator turnover, sales only. Now asset turnover equals to sales divided by total assets. Now take an example 1. Sales 2 lakhs, sales 2 lakhs, asset 1 lakh. Example 2, sales 2 lakh, asset 90,000. Take another one, sales 2 lakhs, assets also 2 lakhs. Now please tell me the answer for first example. 2 times. Turnover ratio always expresses 2 times. What about the second one? 2 lakh divided by 90,000. What, sir? Wait. 2.5 lakhs. 0.8 times. 1 times. Now what it expresses means, if I invest, if I first I taken a loan from the outsider, I invested in assets. By using that assets, I generating sales. That is a business happens. I am procuring money, I am investing assets. By using that assets, I am generating sales. By sales, I am getting a profit. By using that, I am doing the business again and again. This is a process. Now if I invest 1 rupee in assets, as per example 1, if I invest 1 rupee in assets, it generate 2 rupees of sales. Hope you guys understand. If I invest 1 rupee in assets, it generate how much rupees of sales? 2 rupees of sales. That's the mean of 2 times. Are you utilizing mission properly or not? Yes, I'm using properly. Why? Because invest, what is the minimum recovery? 1 rupee. But how much I recovered? 2 rupees. What about the example 2? If I put 1 rupee in assets, it generate only 0.8 rupees of sales. Are you using effectively or not? No. It is called underutilization. It is called what, sir? Underutilization. What about this third example? If I put 1 rupee in assets, it generate only 1 rupee of sales. Are you clear? Now this is called overutilization or optimum utilization. Optimum, under, overutilization, underutilization, optimum utilization. Clear? Now based on this, you can answer. The company has a large amount of fixed assets on its balance sheet. So high fixed turnover indicates not assets values in the balance. The company has a small amount of fixed assets on its balance. Turnover not talks about that assets value. It talks about for rupee of investment, how much sales I generated. Now the company uses fixed assets effectively to generate sales. Yes. Now the company does not use its fixed asset efficiently generate. Is a wrong answer. So with the help of turnover ratio, I can easily assess my company assets usage. How we are using effectively or not. Very clear. So instead of overutilization, we are using a best word called effectively. Guys, clear? Now what is the answer? C. So this is a chapter 5, guys. This is a chapter 5. Are you clear? So okay, done. So next we start with our new chapter. Chapter number 1 in SPM. Introduction to performance management. Sure, Akash, I will share after completion of this class. Don't worry. So when it come to this chapter 1, it consists of 9 units, guys. 9 units. Unit 1, basics of performance management. Unit 2, productivity and efficiency. Unit 3, purchase to pay. So sometimes they're using a word called procurement instead of purchase. Both are similar words. Purchase to pay and vendor relationship management. Unit 4, small correction. Unit 3, financial performance analysis. Unit 4, purchase to pay or procure to pay and vendor relationship management. Unit 5, supply chain management. Unit 6, reverse mapping. Unit 7, order to cash. And customer relationship management. Unit 8, customer profitability analysis. Unit 9, improvement of corporate rating and score. So these are the units we have, sir. Out of these 9 units, you will get one 7-mark question mandatorily, 2 MCQs. So basic performance management, productivity and efficiency, finance performance analysis, purchase to pay and vendor relationship management, supply chain management, reverse mapping, order to cash and customer relationship management, customer profitability analysis, improvement of corporate rating and score. These are the different units we have. Out of these 9 units, every attempt they're asking newly. So in the olden days, they will maximally asking either from supply chain management or customer relationship management, or there is a one difference is there, performance management and performance appraisal. Out of these 3 concepts only, they are fluctuating in the entire old syllabus. But when it comes to new syllabus, in every attempt they're asking one new topic. So for the good time is last attempt, they asked 2 questions from unit 2, 7 marks theory question, from unit 3, 7 marks problematic. Very clear? Generally in this chapter there is a no problematic portion. So due to dry subject, I inserted problematic portion. We already learned we skipped the topic in chapter 5, financial analysis, ratio analysis. We will discuss in this financial performance analysis. Guys, clear? Done. So just based on your foundation level knowledge, you can answer the productivity and efficiency, sir, last attempt. But the issue is, if you write in a single sentences, it will not get a good or 7 marks. You need to write in detailing manner what is meant by productivity, what is meant by efficiency, what are the differences, how to calculate. If you quote all those things, you will get a 7 marks. Are you okay? Now, without late, I start with the financial performance analysis topic. What is our first concept? Financial performance analysis. So just understand the concept properly, then we will write the notes. So when it comes to financial performance analysis, it is a required for every company. Doing analysis of a financials of the company is a mandatory for every company. Yes or no? Why yes? Based on that only, we can take a decisions. Okay, done. Next. Why it's mandatory? So generally in FM, we are using a word called we are the business doctors. We're a business doctors. So why? Because we are doing a doctor doing a analysis on human body. We are doing analysis on financials. Yes or no, sir? What is the purpose of doing analysis on human body? By diagnose the what issues they have. Same he said na. For taking a decisions, you have to do analysis. Apart from that, first you have to understand why I am doing a financial performance means I need to know the strength and weakness of the company. I need to understand the strength and weakness of the company. After knowing the strength and weakness, then I can take a decisions. Before I can't take a decision. If you know the problem, at the time only we are taking a decision, right? So how you know the problem means if you do the analysis of financial statements. Guys, clear? Okay, done. Point number 1 about the analysis completed. Point number 2, what is meant by financial statements? You are doing an analysis of financial statements now. What is the financial statements? Sir, we have a different types of financial statements in the companies, but schedule 3 specifying few income statements as per schedule 3. Every company need to prepare balance sheet, P&L account. There is some exceptions for cash flow statements. What is the exception? OPC and section 8 is not mandatory to prepare cash flow statements. Guys, clear? So generally financial statements means trading account, P&L account, balance sheet, cash flow statement, funds flow statement. Funds flow statement is not mandatory for all companies. Are you clear, sir? Next, footnotes. Are you clear, sir? Next, equity distribution. Sir, what, sir? Changes in equity. These are the important financial statements we are using for analysis. As per section 3, as per Companies Act 2013, schedule 3 format. Are you okay? So analysis completed, list of the financial statement completed. Now the point is, who will use this financial statement analysis? Users. Okay, I agree. What is is an inclusive word or a single word? User. Inclusive word. So can I use a word called stakeholder? Shareholder, internal management, employees, government, debenture holder, suppliers, customers. Yes or no, sir? These all people are using our company financial statements. Yes or no? Okay, done. Now let us tell me what is the purposes of they're using. What is the purposes they are using? Go with the one by one. So take an example. CEO, CFO. Can I use a word called management? Why management using company financial statements? But first thing, they are doing analysis. If they need to do analysis means they need to use. Analysis completed. Analysis we are not started at. As per analysis, we know the definition, we completed that point of view. Now, why they are using is the question. Why they are using is the question. Not analysis. Why they are using? So if they're users, then they start the analysis, they can know the strength and weakness only for management purpose. They can know the internal controls, what happening. They can know the internal controls, what happening. They can know the financial stability. They can assess the liquidity of the company. Guys, clear? That is the purpose management using the financial statement for analysis purpose. Okay, done. Management completed. Pick one, another one. Shareholder. When it comes to shareholder, they will analysis for the purpose of how much return I will get, how much risk I am bearing. Yes or no, sir? How much return I will get, how much risk I am bearing. Owner need that two things only. What is the risk of the company? What is the return? How much return I will get from that risk? Okay. Now what about the debenture holder? What about the debenture holder? They will check liquidity position or solvency position. Company will continue or not, they will check. They will not check about the company profits. Profits is secondary for him. They will check the solvency. Very clear? If company have a strong solvency, then only they will receive the interest. If company is ready to insolvent, they can't get interest back. Yes or no, sir? So for interest payment, they will check solvency as well as how much profits they have. That is the purpose we calculated debt coverage ratio, interest coverage ratio. Interest coverage ratio. Next, government. for the purpose of taxation. Suppliers, credit worthiness, and also can I use the word liquidity position? What is the liquidity position? How much cash or convertible cash they have for immediate settlement. Immediate settlement. Now, can I customer are using your prospectus or financials? Customers, your customers. Yes, what is the purpose? We can't express in single point of view. Customer in the point of view of shares, in the point of view of a debenture, in the point of view of a commodity. Very clear, sir? For example, already customer completed in the point of view equity share, customer in the point of view of debenture completed. Now I am focusing on a commodity point of view. Commodity point of view. For the commodity point of view, they will check effective utilizations, efficiency, quality. Sir, it will see now, it can find out on a balance sheet. Yes, based on the expenditures we are incur, based on profits we generating. So based on gross profit is there now. Gross profit is also be known as product profit, sir. Gross profit is also be known as product profit. I will give one example to get a clarity why customers are using. Option 1, company facing gross loss, or company having a gross profit, EBIT loss. What is the alternative for EBIT? Business, not net profit, business profit or operating profit. Gross profit, operating loss. Option 1. Option 2, gross loss, operating profit. In which situation is a good for the customer to buy a product? Gross profit, operating loss. Gross loss, operating profit. Which one is the best for customer point of view? Sir, common sense, sir. If company facing a gross loss means the product is not good in the market. Incurring cost is more than the sales I generated. It means a failure product. It means what, sir? Failure product. So based on that, can I judge the product? Yes or no, sir? That's why customer using. So now I have another doubt. Sir, if company have a gross profit, gross loss, how you get a gross profit? Company have a, you said an option to gross loss, operating profit. How it possible? Yeah, investing amounts in various businesses, it generate. As well as if you have ancillary businesses, byproducts, that also generate a profit. The sum of profit is less covering the gross loss as well as operating fixed cost, you will get operating profit. Clear? This what you said, what you explaining, that is called analysis. Have you learned this? Because of financials. That is called financial performance analysis. Are you guys clear? Now, okay. Then when it come to classification of financial analysis, we are doing analysis in 2 point of view. One is material used, another one is modus operandi. It's a Latin word, method of operation. Very clear, sir? Now when it come to material used, here what are the documents or information we are using for analysis? That is called material used. When it come to modus operandi, techniques, tools we are using for analysis, that is the second classification. Guys, clear? So of doing analysis in 2 ways. One is material used, another one is modus operandi. Clear? This is a overview relating to financial performance analysis. At the doing a analysis, you have to done with the ratio analysis. Are you clear? So take another example to understand this. Sir, you already know the concept of current ratio. You know the concept of current ratio. So there is a topic name called insolvency, short term or long term. So based on that, based on financial statements, I can easily say company will continue or not. The only one ratio name called current ratio. It's called short term solvency ratio. If it is a more than one, company having a good financial performance. If it is a less than one, company have a weak and it's a chance to bankruptcy. Common sense, sir. For example, company having a current assets 1.5 lakh, current liabilities are 1 lakh. Current ratio 1.5. What does it mean for 1.5? For every 1 rupee of liability, I have a 1.5 rupees of assets. Example number 2. 1 lakh rupees current assets, 1.5 lakhs current liability. 0.75 0.67. 0.67. What does it mean for this? For 1 rupee of liability, I have only, sir, when it come to any issue with the outsider, I can argue with him. I will discuss. I will ask time to future. But when it come to this, people are there now. Bills payable, creditors. The time between us is only 3 months. If you not settle money within the 3 months, they will directly approach court. Yes or no? As per Negotiable Instrument Act, they directly approach court. Court will say only common sense. You are not able to payment the short-term persons. How you run your business in long run? Please shut down. Guys, clear? Based on that current ratio, I can judge the entire organization. Guys, okay? Generally, it's a basic example, not works in reality. So, for example, situation 2 is there in my company. I will discuss with the creditor. So, this time not works well as in an organization. So, give me time. Automatically, he will not ready to accept. Why? Because as per Negotiable Instrument Act, the time period is lapsed. He can't do anything in court. Very clear. That's why I'm providing a lot of offers. The first offer is, if you continue, if you give a 3 or 4 months time, I will give my company ownership 1 or 2%. Then there is a chance of agree. Yes or no, sir? It's a reality scenarios. Reality. If you offer the equity, there is a chance of acceptance. Even though they're not accepting, there is a concept in your balance sheet. Investments. We are doing investment for the future purposes. Yes or no, sir? Now I am selling that investment to the outsider. I will procure the money from the investment. I will settle to creditors. This is the business. Guys, clear? If your current ratio is less than 1, you are not so నువ్వు డైరెక్ట్గా బిజినెస్ ఆపాల్సిన అవసరం లేదు. Guys, clear? So we have a multiple options to discuss with the creditor. But as per theory saying that if current ratio is less than 1, please shut down your company. You are financially weak. Are you clear? But lot of company, even though current ratio is less than 1, they will survive. The reason is different alternatives or different strategies. Are you okay? Okay, next class we will write down the notes for the financial analysis in a short manner, as well as I will give a clarity about the ratio analysis. After that, we have multiple problems based on the ratio analysis. Okay, sir, thank you.